GM friends, and welcome to the future of gaming. You are listening to our weekly blockchain gaming rollup. We are recording this on the 1st of July, Friday the 1st of July. We've got Philip Collins, Devin Becker, and myself, Nico Vereecke or Nico. Today in this weekly rollup, we're talking about Axie and its updates. The Solana Phone, which we shortly touched upon last week. We've got the crypto winter is here and its ramifications, or maybe even and all the companies that are going bust. And then we're going to touch upon SOBA raise, and then we're going to talk about whatever comes up. First of all, so last week was NFT NYC. I actually, in the meantime, did another crypto conference, and so I've learned that there's three types of Web3 conferences. There is let's start with the good parts, right? Or the good type. So there is developer conferences. Examples are DevConnect, like there was one in Amsterdam a few months ago. You have like ETH Denver, I believe, is also a good one. I'm going to ETHCC in like 2 weeks. And so these are like where builders come together and talk about like building, right? And these are the good ones. Then you have NFT events, like NFT NYC, which are like absolute shill town, right? Everyone's trying to get rid of their bags, except especially in this market environment, and there's no constructive conversations going on. And then the third type, which I went to this week, is a corporate Web3 event. I went to the Web3 Summit in London, and it was a bunch of suits who need to explain to their bosses that they're doing something with Web3, and that they went to a conference to prove it. And then they're looking like what they can do with it, and it was weird, man. It's like I was sitting there in my t-shirt and my jeans, and then you had all these people in the suits. So yeah, these are the three types. If you ever have the choice in going to an event, go to the first. Go to a builder event, because that's where the 22-year-old geniuses walk around, and these are the guys that you want to talk to.
Yeah,
all right.
Definitely avoiding that third one.
Yeah. Although, I mean, I was even more annoyed by NFT NYC, to be fair. Just like, it's just terrible reputation. It's all about like speculation and money, and it's like, oh, my NFT collection is going to the moon, and that was.
What about Dr. Disrespect was there?
Dude, I have nothing bad to say about Dr. Disrespect. He's gonna kick my ass if I do. So I'm staying away from that one.
I don't know, Nico. It sounds
Exactly.
like the one with the suits might actually be the best way to pump your bags. Just unload it. No one knows the difference.
That's true. But it's true. Yeah. But it's for the long term, so I'm not looking to get rid of my bags. I'm looking to get more people interested in the bags in general, all the bags, everyone's bags. Anyway, I have a different background. I'm in Spain right now, supposedly taking a holiday, but I woke up early to have a chat with these two gentlemen and talk about what happened this week. So let's get into it. What do we talk about first? Axie, Devin, you want to take this one?
Yeah, they're trying to keep things interesting, I suppose, given the kind of quiet nature of the game at the moment, just because kind of everyone's already moved on to some extent. I'm sure there's plenty of people beta testing or alpha testing, I guess, right now, Origin. So in the meantime, they're shutting off Classic, which basically means kind of the death for now of SLP, since there's nothing you can do with it. I imagine you can still breed, but you're not going to be producing it, so I doubt people are going to be spending it to breed and buying more, unless they're like really trying to get their stuff for Origin. Then also Origin is entering phase 2, which it means they're actually going to have a leaderboard for AXS prizes at the end, on top of a bunch of like tweaks that they're made, like balance changes, introducing new keywords, stuff like that. So they're really trying to like ramp it up, and that's going to go till the 28th of this month. So definitely no SLP really to be used till at least August. And then lastly, they're also starting land staking now. And so that should be a pretty interesting one, because that was like fairly controversial in terms of like earning and how that works. And right now it's going to be like passive staking, but then like eventually there'll be like active stuff you have to do. So we'll see how all that goes, but they're kind of dropped all that basically today, kind of all at once for the most part.
Okay, let's go through those. First, you say SLP is dead because there's no source of SLP, right? So you can only get SLP by playing the original Axie game, but there's still a sink of SLP. Isn't that a good thing? Because there's no supply and there's only demand?
Right, but the only demand is for breeding, right? Because they didn't introduce any other sync into the games yet. They will for Origin, but because there's no other sync for SLP, like there's no demand for it, right? I mean, unless people are trying to like buy and long-term hold, or whatnot. It's mostly still going to be sell pressure. People just kind of like piecing out because there's nothing for them to do at all. Now that all the seasons of Axie Classic are over. And so, I mean, I imagine there'll be variation in that, but just what demand is there for SLP? And the thing is, we know this season of Phase 2 at least runs till the 28th, but there's no guarantee that come August, SLP starts kicking in Origin either. So, like, there's a possibility that things get delayed all the way until, like, September or longer. And I don't think anyone wants to be sitting on SLP during a crypto winter. So I got to imagine people are going to just unload and move on to something else right now. So, I mean, they could try and bring it back, but the thing is now that all the pressure is on AXS, right, as their loan token, and they're going to be providing AXS as a leaderboard reward at the end of the season, as well as providing AXS now going forward for land staking. So AXS is going to increase in supply, and realistically, if no one's using it for breeding, there's no sink. So I imagine AXS value goes down even more. Because there's what's the demand for it, right? Unless you're trying to buy something with AXS, because I can't imagine anyone's going to breed. So this is a really weird spot for Sky Mavis to be in general.
Interesting. And so if you have land, you can stake it, and then you will receive AXS as well.
Right, yeah. Here, I have some numbers if you want to kind of get an idea of like ballpark what staking looks like daily, right? So you're going to be earning about either at the lowest level land 0.008 AXS, or all the way up to 32.7.
Was that per day, per month,
per day,
per
sorry,
year?
I thought I said that.
Yeah,
and so that right now at current value of $14 for AXS, that's looking like $1.12 a day at the lowest level, or up to $459 a day. That's, of course, maintaining, stable AXS value, which is not likely to happen. So that's likely to go down. And actual floor prices for those lands, for that low-level one, right now on the market, $13.78 for the lowest level, and $371,000 for the highest level. So can't imagine those moving very quickly on the market, especially if AXS starts going down.
Wait, when you say $13.78, is that $13?
$1,378.
Okay, it's important, right? Because I was like, that's like an ROI of 12 days. Which...
No, sorry. Yeah, I guess I was implying a decimal point there that wasn't there.
Yeah, thanks. All right. Okay, but it's still, so if I calculate things correctly, let's say $1 per day at current AXS prices, which I mean that's that's a very unsafe thing to assume. Then we would get back it's like a 3-year or 4-year ROI on the cheapest land, right?
Yeah, I mean, at least at least 4 to 5. I think at that point, if it maintained its stable value of AXS.
Yep. Okay. Interesting. Yeah, wouldn't want to be an Axie AXS investor now. Sorry, Phil.
Yeah, no. I mean, one of the things that's really interesting about Axie, especially going into this cycle, is the fact that they're almost a full cycle ahead of everyone else, where we're kind of still part of the white paper phase of Web3 gaming, and they've lived it, they've faced the challenges, and they are kind of the trailblazers, and so they're kind of creating the rules and creating the future as they go. And at the end of the day, with a lot of this stuff, especially now that they are in this almost recreation mode of changing the gameplay, changing the dynamics of how the token ecosystem works, they're really acting as a central bank of sorts. And I do think that'll be a living process that's going to continue changing over time. But yeah, I mean, it's hard to give a scorecard right now on a process that's kind of new and unproven. So I'm curious to see how they handle it. I think, as Nico alluded to, we're investors in Sky Mavis, so won't go too deep on this topic. But I think that from the investor side, we've been in that company for a little over a year, and we have kind of seen them live the first full cycle. And I won't be surprised to see a lot of these tokenized play to earn economies be in a similar situation if kind of V1 of the game isn't a full-fledged experience that can last multiple years. And I think when it comes to Axie, even the team acknowledges that's not really what V1 of Axie was from a trading card game perspective. So we'll see how it plays out. But that central bank function is something I don't envy in any part of the world, tokenized or not right now.
If you look at the U.S. right now, I wouldn't want to be a central bank, given the the quagmire the Federal Reserve's in. It's not exactly an envious position to be in. You may print money, but you're all of a sudden now on the hook for a lot of side effects of that.
Yeah, totally. And this brings me back. So in the beginning of this year, of 2022, I made the prediction that if you would ask me which game would be most successful by the end of the year, my answer was going to be like the highest likelihood was for me Axie Infinity, because in my head they had millions of people who owned Axies, and so they had like this sunk cost fallacy problem where they owned Axies and they maybe didn't really enjoy the game, and they initially started playing for SLP, as a way to make money, but now those rewards have gone down, but they still own the Axies, and so if Axie Infinity or like Ronin more broadly comes up with some really cool games with Axies, which I can totally like envision, they actually immediately have a very solid user base that can start playing. And
lost Nico there. I don't know if I'd necessarily call it a solid user base in the sense that like I imagine a good chunk of them have left, so it might not be super solid just because like who's still playing at this point? Is it like just scholars that are hoping to make it like to keep their skill level up in the new one and make it work for them when it comes around again? Is it like bag holders just hoping to like kind of stay the course? Is it guilds that are just like, well, we have inventory, so we might as well like keep it going? But it's like now that you can't use SLP with it, there's even very little value in holding on to Axies. So you've got even like organizations like Breeder DAO that are going to have to be fully diversified into what they're breeding. Obviously, like they were from the get-go, right? They weren't necessarily putting all their stuff into Axie, but the slow progress of Sky Mavis, I think, has been a big problem for them in terms of how slowly they actually adapt to things. Like they could have adapted Classic into some sort of like add another sync, add some sustainable stuff, and then work on Origin. But like leave it running, like leave the car idling, so that way it's ready to go as soon as you're like ready to move people over. But they didn't, and I don't know that you can bring everyone back, even if it's like a really, really fun game.
Yeah,
I think
you
the
guys
way I
hear me
view
back?
that on you're back now, Nico. I think the way I view that on the Ronin side is that I think Ronin's success now that Axie has had its own success can be almost independent of the initial IP that Axie was for Sky Mavis, where what Sky Mavis did do is get millions of users onto the Ronin ecosystem, and in the current environment, that's about as big as you can get in blockchain gaming for the total addressable market of players today. And so I think that it's not the easiest thing to get in or out of that. There's bridging involved, and so once you're in, I feel like
open that back up.
I feel like people are kind of you're in the system, and so I'm curious to see what the reactivation looks like on Ronin for players that might be tired of Axie and don't want to play Axie, but if that user base compels other great game devs to build within Ronin, is that an easy way to turn back on that several million wallets that are already there?
Now, problem is you compare it to other blockchains, right, that have big funds that are trying to do things with their blockchain. Polygon Studios is doing tons, right? They're constantly helping studios get going, get started. You look at like Solana is funding tons of stuff. Avalanche is funding tons of stuff. Immutable's funding tons of stuff. They're all really like bringing in lots of diversity to the blockchain, really supporting developers, trying to find creative ways to entice them over. And what's Ronin doing? Throwing out a half-baked creator program. Like it's... I want to be optimistic about Sky Mavis and Axie and Ronin, but they haven't done anything since the crash that's really made me go, you know what? Yeah, they got this. That value of that blockchain is just a long play. Like I hope I'm wrong. I hope Ronin, as you said, captures a ton of value and everyone like builds cool stuff on it. But the fact that they didn't really open it up for building, really just I feel like they kind of shot themselves in the other foot. And at this point, they can't even limp.
Why do you think they're now allowing staking of land and letting people earn access from that?
To appease the landholders.
Exactly right. So basically, in my view, they sold the land and they were like, "Oh, there's going to be gameplay by the end of the year." Right? That's like what I seem to have heard last year even, and now it's like, oh shit, this shit is going to take a bit longer. And so, okay, we have these like people that invested millions into these pieces of land, and we need to give them something to do. So we're going to let them stake it, which is a recurring theme in blockchain games. It's like, okay, we sell NFTs, and there's going to be utility, right? We're building a game. It's going to be amazing, and oh shit, this game building is tougher than I expected, actually. So what do? There's these people, they bought these NFTs or these tokens, and there's nothing to do. You know what? Let's make them stake it, and then we give them some rewards. And I feel like this is a recurring theme in blockchain games. And so I initially I thought that was fine. You know, it's like giving a financial utility to these assets. And it's like, okay, if you need to bridge a certain period, you can do it that way. But the problem that I realize now is that by doing that, you're turning these assets, you're like basically financializing the assets. And I think that becomes problematic for the kind of people that then own the assets that you get, right? If you want to have players that want to own the assets to play the game, which is what you would want if you want to ever have a sustainable game, then you can't allow them to stake it because they're not there for that. And then in the end, the only people that own your stuff are going to be people that do it for the return on investment. And at that point, once you actually have something to play, these people are like, yeah, I don't even like this game, I don't want this, and they're going to either sell it or they're going to use it to extract the maximum amount of value, because that's literally why they own these assets. And so, I mean, one of my frustrations in the space right now, when we touched upon this last week, is that from all the players in the space, most of them are either earners or speculators, and by allowing people to stake shit, you are, basically turning all of your players into these, or having a natural selection for that type of player, which is something you want to avoid. And so I'm going to make a case right here, but I want to write it down as well, that staking in the inflationary sense is, I think, strictly detrimental. If there's zero gameplay relation and it's purely financial, I think it's actually like a bad thing for the long-term health of your game, even if you on the short term have to disappoint holders, because building a game around the assets takes a bit longer.
Won't get any disagreement from me. I totally agree. I think staking is one of those things that came from DeFi and maybe should have stayed there.
Mm-hmm. Agree.
Yeah. Cool. All right. We touched upon Solana for a second there. Want to talk about the Solana Phone? What's new there, Devin?
Yeah. It's always interesting seeing these attempts at making specialized phones, right? It just makes me think of like the N-Gage back in the day, right? Stuff like that. And this isn't the first attempt at a blockchain phone. What's interesting about this one, I think, though, is that Solana's trying to build like a stack specifically for Solana in the phone, right? To make it easy. And at least the programming language that they use, Rust, I think is something that's not terribly inappropriate for like mobile development, because it's an efficient and relatively like safe language. And I think that might be probably one of its stronger suits in bringing some of those hardcore developers over. But at the same time, if it's not like expansive to other blockchains, I don't know how much utility that will have, because right now, like most of Solana is step-in right now in terms of like games, right? Now maybe people use it for crypto or other non-game stuff, but until like games are really cracking on Solana, and even then, I don't know if that's like gonna really make a huge difference. It sounds like it's Android based, but the question is like, are they looking to bypass the App Store, and is that the big play? Like that's the interesting angle to me, is whether or not they can make Web3 native games that bypass the whole App Store thing without just inviting more scams, essentially.
Yeah. Does it come with step-in shoes? Are you buying a phone,
Hopefully.
paying a bit extra, and you get a free pair of shoes with it?
They'll be pretty worn, I imagine, by the time you get them.
It's true.
Yeah. I feel like with these kind of things, we just haven't seen recently the need for specialization of phones. To Devin's first point, I'm just curious to see what the actual additional value is from a Solana integration on a phone. You have all of these various different software integrations that you can have on your iPhone or Android. And so the incremental benefit, I think, is going to have to be pretty significant. And you're already catering to a smaller phone market through a smaller group of people that are going to A, be into cryptocurrency, and B, care enough to buy a phone around it. And so I'm just kind of curious what the market for that phone looks like. And I'm really interested to see what the value is, because if they're going to go through the effort and the pain of distributing a phone, I have to imagine there's something there. But like, I can't imagine for myself personally what would drive me to go get a Solana phone if it came out today or tomorrow.
Especially today or tomorrow. Like, the
Yeah.
market is not ideal for this launch, I think, at this point.
Yeah, like the only thing I can think of is that it becomes one of the mass adoption cases of hardware wallets, where most people don't want to go through the extra hoops of managing a hardware wallet, holding on
I'd
to
almost
it,
rather
not
Ledger
losing
make
it.
the phone than that.
Yeah, no, I mean, and that's an interesting point, but like, I do wonder if that's the end goal here, is it becomes your hardware storage of your digital assets. But from what I was reading on this, I haven't really seen much of that being part of the vision for it, but who knows? Maybe it will be. Maybe this thing will surprise us and come out with something crazy that is transformational. I just like can't think of anything that would move the needle for me.
I'd make a case against it being a hardware wallet, though. Given the nightmare that I've been through in two-factor authentication after losing my phone at GDC, you do not want a phone that contains all of your money, too, essentially.
Yeah.
I mean, we know it's not really containing your money, but at the end of the day, if it's containing your only access to that money, two-factor alone has already been a nightmare to try and fix across all these different exchanges and other things, and like having to redo KYCs. And I wouldn't want to put that on a phone, just because like a hardware wallet's one thing, you treat it very differently, and in terms of your security of it and stuff like that, than you would a phone that you're just like, farting around on, or whatever you do with your phone.
Yeah, and I mean, the notion of walking around with your hardware wallet in your pocket also just sounds insane. Like, it should really be in a safe somewhere. So there would need to be some additional layers to that, because it does sound a little ridiculous to be walking around with your crypto portfolio closely accessible in your pocket.
Talk about wallet software. I've been having a few conversations about where the wallet space is going and how we're gonna make sure that everyone can actually use wallets, because you guys are absolutely right. If you have one contact point, or like one space where you hold your keys to all of your net worth, it's kind of dangerous, right? So it doesn't make a lot of sense. And so, I'm hearing more and more about like distributed keys, or like smart contract wallets, where you hold maybe one key or two keys, and then you have a trusted third party that holds one key as well, and then depending on the amount of funds you want to transfer, the amount of value you want to interact with, you need either like two-factor authentication, but if it's a small amount, only one. And so I can see that work where it's built into Solana Phone. So basically, you open your Solana Phone, you have a wallet there. Probably, I'm going to assume it's going to be more than only Solana-based tokens, right? It's going to be like you can get Bitcoin and ETH on there. At least I hope so. And then it's like integrated third-party or an integrated smart contract wallet, which means that it's like if you lose your phone, you're still fine. You still you can do 2FA, like email and I guess then phone number when you get a new one, and then somewhere you can get your keys back and your shit back. That's what I assume. That would make sense.
Right.
So
But who kind of, I guess, pioneered that in a way, though, is like Facebook already did that with the whole like friends being able to help get back into your account. I don't know if you remember that whole thing that they tried to do. So like they already kind of tried that. I don't know if that's even still a thing, but that was an interesting model of like an easier approach to doing that. Because like right now, imagine the average person trying to manage a multi-sig wallet key system. It's just, that's not very easy for an average person to do. In that sort of situation, like imagine having to explain to your grandma, can you hold this private key for me? Here, I'm going to write down the seed phrase. Can you put it in your cookie jar and keep it safe? Like it's not ideal for the average person either, but I do think you're right that like we need to start looking at other factors, because even like phone number is not a secure method of like recovering your stuff. Like honestly, let's say I had when I lost my phone, right? And I was able to recover some stuff via SMS messages. If my phone wasn't completely locked and not displaying text messages, it could be displaying those text messages on my lock screen, and then whoever has my phone can then get it. It's not and cloning of SMS numbers, coming from cybersecurity, I can tell you, it's like $10 to clone someone's SMS number. It's not a difficult thing to steal stuff that way. Email's not necessarily terribly more secure. We don't really have good security across the board, period, for anything. And as we move into digital finance, that's going to be a real thorny problem if what becomes the equivalent of fiat for people starts to become like locked to that stuff. it's going to be like a lot more worrisome than a Solana phone. I'll put it that way.
Yeah.
It's also just adding to the problem of too many wallets coming out, and there's so many people building for wallets, and that's not necessarily a bad thing because we're still at this stage where there's genuine product differentiation amongst a lot of the startups that are coming out to market or in the process of building their wallet solution. But at the end of the day, as a consumer, I don't want 20 wallets. I'm okay with having a few. You know, people have a few bank accounts, people have their assets distributed in, you know, the non-blockchain world. But in this, there's so many wallets coming out, and I don't know how they're going to get weeded out. I mean, I guess maybe the best products will win over time, but I think there's this assumption that different use cases can have different wallets for different users, and I just don't see individuals holding, you know, 10 plus different wallets for all these different functions. I think
individuals are just going to use custodial wallets. Like that's what it's going to come down to. That use like social logins, like Google, you know, that have their own security features. Like that's what people are going to do. Like I literally actually just yesterday, I think it was, I had to walk my brother through setting up Polygon in MetaMask on his phone because like I wanted to send him some USDC to pay him back for a dinner we had, right? Like, and so he didn't know how to do any of that. Like I literally had to go into MetaMask, take screenshots of how to like actually like set it up, how to add the Polygon network, because it's not easy on MetaMask mobile, how to add then USDC coin with all like the different addresses and all that, and then just to send him like a test one USDC, and it got to the point where he never even responded to whether or not he got that. Like I don't know if he ever even did it, and it was like seriously like 10 screenshots of things like
you got
circled.
rugged. You got rugged for
right,
$1.
right, with that one USDC. No, if anything, he got rugged. It was a lot more than one USDC for that dinner. But but that's what I mean. Like it's very difficult, and like MetaMask mobile, for example, being a very different setup than MetaMask desktop browser extension, just invites problems. And I think at the end of the day, people are going to go to custodial stuff. And games are going to as well. Like that's kind of the direction we're going. It's like games are going to, and they'll probably even be like ones that are chain specific. Like let's say Polygon just has, here's your custodial wallet for people that don't want to deal with MetaMask and all this other stuff. And then like games can use that as well for people that don't want to have to set up a wallet. I think Sequence from Horizon that does Skyweaver is a pretty interesting demonstration as well that works on Polygon as a demonstration. And I don't know if that'll get traction because Skyweaver doesn't seem to want to spend the money on marketing yet to get that out there. Hopefully they'll kind of man up at some point and start pushing that product that's been like polished for like a year. But maybe that'll be a good thing. And wallets is definitely going to be a sticking point for games as well. So like, you know, bringing it back to the game topic, I do think like that's going to be a big deal. Is like we constantly talk about how do we onboard people, and we all kind of know as we're looking at games like custodial is going to be kind of the stepping stone there.
How do you guys think the wallet space will play out? Because there's no inherent revenue model around wallets. Like having a wallet or owning a wallet, you're not going to sell wallets because there's a bunch of free options out there. And so basically the only way wallets make money right now is to provide swaps. So I think MetaMask makes a shit ton of money because in MetaMask you can actually exchange ETH for, you know, Matic or like some other token. They take a small margin on that, so that seems to be the current revenue model. But also switching costs are pretty tiny because you can just export and import your keys in another one. Obviously, it's not easy to do that, but it's easier, I guess, than, you know, moving from whatever social network or like email provider you're currently using to a new one. And so I'm just wondering, like, how does this play out? Do you have like a handful in 10 years, or do we still have like 30 with application-specific ones?
Yeah, I wonder if it
becomes banks, Coinbase.
Yeah, I wonder if it'll be similar to credit cards as well, where, you know, they're taking transaction fees and user acquisition costs are probably going to be really high to start. And then there's going to be all of these embedded reward systems that encourage you for being loyal wallet users and making sure you're maximizing transactions with a given wallet, because eventually, you know, just like we're seeing with all these infrastructure layers, like a Polygon or an Immutable, they have all these massive ecosystem funds because everyone's in a massive land grab for developers, and you throw money at the problem. It might be the same for wallets on the consumer level, where you basically throw money at the people, and then once they're there, you just find retention systems, rewards, and loyalty programs for those users to keep them transacting with your wallet. But I think that will be a tough business. And you know, at scale, there will be winners, but I think that'll be a very expensive UA campaign.
I have a relevant anecdote from today too, so I'm just bringing my whole life into this here. But I think it's very relevant to what is a possible thing, kind of along the lines of what you're talking about, and this idea of like what banks were to gold and money and checks and stuff like that, and then you're talking about going to the credit cards. I'm seeing fiat on ramps as a huge opportunity because you look at, for example, whenever people are providing instructions on how to like buy their crypto for their game or whatever, they're all like pointing towards Coinbase. Or they're pointing towards an on-ramp, right? Because it's the idea of converting. That's the big hurdle. It's not converting between token swaps and stuff like that, because usually that's not actually that difficult. It's the fiat on-ramp. So, like for example, I went to buy some DEC and Splinterlands today, right? Because like I'm like, hey, it's like half the soft peg price. Now's a good time because I can buy Splinterland packs at half the price essentially because they were pegged at a fixed DEC amount. And so I saw today, I was like, oh, actually, they have their on-ramp on now. Like they finally set up their on-ramp. And unfortunately, it wasn't MoonPay and it wasn't Ramp, two I've already used. Because it was a new one, I haven't used Transact, I had to go through a KYC nightmare. And needless to say, after like 4 attempts at trying to get it working, I am now dealing with customer support over email. And this is not the first time that's happened with one of these on-ramp systems. And so I think that sort of on-ramp thing, especially the KYC problem, that starts to really become the sticking point. If you can have, like, as Philip's talking about, like UA and like onboarding people and like capturing them into one space, being able to make it so that you're not dealing with KYC across all these multiple ones or having to deal with like whatever is provider for a particular game, like just having one on-ramp that you could always use to get in and get whatever crypto you need to. That I think is a huge value capture and one that games would be happy to support because they don't really care what on-ramp it is for the most part. And that's why we have so many competing right now is because they're just like, oh, whichever one will partner with me and make it easy and set up the gateway for me. They'll do that. Like I remember when like PayPal was trying to get traction in the early days, right? It feels like that where they're trying to get people doing e-commerce. And so we're in a similar position now. So I think whoever kind of like, and Coinbase so far is kind of a little bit ahead because they found that kind of semi-bank, like the custodial wallet plus also the fiat transaction sort of thing. But I think the people that don't want banks might want to go for more of the on-ramp kind of thing. And a lot of this has to do with the regulatory issues too, right? Where like people are using these on-ramp for their games because they don't want to deal with the regulatory stuff. So whoever kind of smooths all that out and manages to get across a number of popular games, they kind of win that game.
Mm-hmm. Let's see how this plays out. And in the meantime, crypto winter's here, right? And I want to talk about these implications and what's happening in the markets. This is more DeFi related, but we've seen Celsius network in trouble. We've seen bridges getting hacked, which is not necessarily related to this bear market. But Phil, you want to give some context about BlockFi and Celsius and these kind of neo crypto banks platforms?
Yeah, for sure. So the spawn of this is really news today coming out that FTX is closing in on their deal to buy BlockFi for $25 million. Pretty much a pure buyout. For context, that is about a 99% discount to the last valuation of $4.8 billion, I believe, in private venture rounds. Along with Celsius, it seems like there's just a lot of groups that have gotten really aggressive, and when the market turned south, aggression kind of showed. It's like the good quote about it's only when the tide goes out that you see who is swimming naked, and I think that's what we're starting to see right now. And I do think it is an interesting.
Can you maybe touch upon how they worked, and what the problem was, and like what they did wrong, essentially?
I think a lot of these groups were honestly just over levered. And I think they were fundamentally designed for a bull market and assuming that the tide never was going to go out. And once it did, I mean, they just got into balance sheet issues and just fundamentally weren't able to continue operating at the pace that they previously were. I know, for example, with BlockFi, FTX had just provided a $250 million emergency line of credit for BlockFi for them to continue their normal course of operations. And I think that's happened with a lot of these groups. I think the Celsius situation wasn't too dissimilar for that. And yeah, I think it eventually just becomes balance sheet issues that make normal course of operations difficult.
Because just to hop in there, the way they work is they ask people like, you can deposit crypto onto our platform and we'll give you like a return, like a yield, right?
Yeah,
and so
7% on your Bitcoin.
In BlockFi?
I think that's what it was last time I checked. It was a little while ago.
Yeah. So I used to use BlockFi, and so it was really fun. Like basically, they got me in because they were promising like I don't know, like 7 or 8% on your Bitcoin and ETH, and so I sent a bit over. Never send all of your crypto to one platform, because that's like today we see why that's a bad idea. Because they were promising that, and so essentially like I started up, and they have different tiers, and so if you up to like 0.1 Bitcoin, you get like 7 or 8%, but the moment you have more than let's say 1 Bitcoin, you only get like 1% or something. So it goes down quite rapidly. And like I'm there chilling for a month, like I'm happy, and then suddenly it's like, oh, we're having rewards, boom. And then a few months later, oh, we're having rewards again, which is I guess a good thing, right? Because it helps them survive. And then you had Celestia, which was like, oh, we're giving you 20% on your USD. And they were they were giving 15%, and then so what they were doing, I believe, they were taking the USD, turning it into USDT, putting it on Anchor, which was on the Terra network, and then we all know what happened there, and then that everyone got into trouble. So essentially, there's no way to make free money. The only, I guess, safe way for this to work is there's a few native staking mechanisms. For example, Ethereum proof of staking. You can get, I think, between, like 6 and 12% or something, like a pretty decent yield by staking in proof of stake. And so the only way that stops working is if Ethereum collapses completely. And so you can be fairly, like, that's for me, I guess the main use case for platforms like this. It is for like the less sophisticated, technically sophisticated people that could just like, I've got ETH. Like I would stake it if I knew how to set up a node and do all that shit myself. So I'll just use like a third party for that, and they can take like 1% or 2% on whatever I make with my ETH. I think that's the one that makes sense. But apparently a lot of them were being more adventurous in how they used the assets that were given to them, and that's why they're in trouble.
Yeah, I mean, with all these things, when it comes to stuff like yields and all this other like free money kind of stuff, like at the end of the day, like you have to look at the amount they're giving you and the value you're providing and make sure those two things match. Because if they don't, then something else is going on, right? Like a lot of people were promising like high yields that were mostly a user acquisition play and not realistic to the value that you are providing in exchange for that yield. And so that's what it comes down to, is like, because I mean, banks are kind of doing the same thing a lot of times. Banks are also kind of taking your money and then loaning out 10 times what you're giving them, and like, and they have, but there's the whole federal backing, right? But banks still have the same issue. Like we're going to see something probably similar to 2008, where a whole bunch of banks got absorbed into like the top 5 banks right after 2008. Like I was a Washington Mutual customer, and then all of a sudden I was a Chase customer, and I was like, God, no, what happened? Like my bank that was super friendly and nice and awesome got bought by this giant, monster because of that. And I think we're going to see the same thing in this space, and then yields will come down and stuff like that, because of the ones that are actually doing more realistic stuff will actually be able to sit through the storm and buy up all the people that were doing like, and the whole free lunch thing is like, it's great when like it's a short-term play. It's the long-term free lunch that just doesn't work out, because you never know when the music's going to stop. And I hate to see it happen to all these people, but at the same time, because I wasn't invested in a lot of this stuff, I'm kind of glad to see everything get shaken out, so that like the good stuff can get built again, and we can like get rid of all this yield farming kind of madness where everyone's just like crypto craze money everywhere sort of thing, and get back to building and real stuff again, just like after the last crypto winter, where like we went back to real stuff again, and then we got Axie, and then a lot of people went kind of crazy again, and we got to go through these kind of crazy manic phases, I guess.
Yeah, and I mean, to that point too, I think we saw a lot of what I call capital momentum over the last year, and eventually projects do have to answer to investors and to the private or eventually the public market on the value they're creating. And a healthy markup isn't worth anything if no one else down the road validates it. It's just numbers on a piece of paper. So we'll see more of these, but eventually you have to create value to receive value. And I think we're starting to see the early examples of this, where a $4.8 billion company in theory can come down very, very fast if it's not meeting its operational requirements.
It's insane. Wow. And so, what does this like general crypto winter means? Before I continue that question, You were talking about this, Devin, and you two, Phil. Like, it feels like crypto in general is just one giant game of musical chairs, where especially in bull markets, it's like everyone's doing cool stuff, and then it's about like who can get out on the best possible time, right? And if you get out, then you're good, and then if you're still dancing when the music stops, then you're in trouble. Anyway, so I'm going to continue my first question, which is, what does this mean for games companies? Like, do you think a lot of them will now, like, that got really bullish on crypto because prices were going up and everything was good and everyone was having fun, everyone was dancing, and they're now like, holy crap, what do we do? Why are we integrating NFTs in our game? It makes everything so much harder, and it seems like this might be going nowhere anyway.
I mean, at the end of the day, there's value in games, period, right? Like, games are valuable. Like, they're a huge industry. Mm-hmm. And as long as you like really think things through and do things correctly, I mean, not every game's a winner, right? Even the best made game just maybe doesn't land the marketing right or the timing right, or it just turns out the audience is too small. There's tons of risks in gaming, but as an industry, it's huge. And like at the end of the day, I think everyone's just going to kind of have to take their best shot with what we know so far. And it's going to be iterative, and people are going to kind of figure it out. I think obviously, like, we see models that like Axie that everyone thought were going to work out, but then like if you really thought it through, you go, wait a minute. And I hope people now just pause and like still build out their games, but really like pump the brakes a little in terms of like saying like this is for sure the way to go, and really look at like, okay, now that we've had a chance to shake things out, let's really think things through like with the more sound fundamentals. And I think it's entirely possible then to make this a really successful thing. The problem is all the ones that are already in motion based off of Axie or Solana or what, like all the X to earn games, like there's so much that was already in motion, and I hope they can pivot so that we don't end up with like these slow moving disasters heading into fall and stuff like that, because it's entirely probable that everyone's just kind of like, well, we got our funding and we already kind of are going this direction, so iceberg ahead.
Mm-hmm. Yeah, I think when I think about the risks of this current market, I think the people that are building in Web3 because they want to build in Web3 and create value through it will continue to be here. I think a lot of people that maybe were doing it to put it on the pitch deck and raise it 3x the valuation they could have gotten otherwise might fade into the background. That's not necessarily a bad thing. And that doesn't mean that every game needs to have people building on-chain, right? But it does mean that the people that do build on-chain should be wanting to build on-chain for the right reasons. I think the biggest concern for me is I think a lot of the pure amount of money that flowed into Web3 gaming attracted a lot of really great teams to give it a shot and experiment with it. And so when we talk about the future being games first, I know Devin loves when people talk about the games first mob. But there have been a lot of really impressive teams that have formed around this. And I do think there is a bit of a self-fulfilling feedback loop around more capital, better teams coming into the market, and more capital, the more people that are going to come in, and the more people that come in, the higher the likelihood of things hitting, just purely based on the law of large numbers. And so I don't want this current cycle to discourage really great game developers, some of which are already in the market, from coming over and trying to build great games with Web3 features integrated into them. So I do hope that it's not a disincentive for great games teams to enter this space, because I do think there's a lot of good that can come from really impressive developers that have extensive game experience from using that background and creatively applying blockchain in their titles.
Mm-hmm. Well, hopefully it'll just now mean extensive Web3 experience. That's what I'm hoping, is that all this capital pumped in, even if the games don't work out, that we're building up human capital in terms of knowledge and experience and stuff like that. Because how do you even hire like a Web3 game developer right now? They just don't exist for the most part. And I'm hoping after all this winter, there will be a bunch that exist, whether they were successful or not. Now you've got people with experience that have been in the trenches, hopefully people that have come over from AAA game development as well, or other like normal game studios or mobile or whatever, come over with that experience and now the Web3 experience. And now then when we kind of come back to building stuff fresh again, they can do it the right way because they've been through it. And I think that in itself is like a big investment, and thankfully one that didn't come out of my pocket, but one that I hope pays off in a few years at least.
On that topic, Nico, I'd be curious to hear your experience in this as well from the VC seat. Having now talked to hundreds of teams across Web3 gaming over the course of a year and a half, it's been really interesting to see how fast the market does consolidate around ideas and trends, where it was almost like a constant narrative that I was getting. Even if I was talking to 5 different companies on a given day and then 5 different ones the next day, there was almost this narrative where people were catching on to what was and was not working really, really quickly. And so like Axie was blowing up, and we were part of that. So we talked to a lot of teams about Axie, and everyone caught on to play to earn. And then the next stage was, oh, we need fiat on-ramps because there aren't enough people that are willing to learn blockchain mechanics. And then it was games first. And then it was, let's find ways to use blockchain creatively. And it was, no matter who you were talking to, everyone was catching on to the same themes at the same times. So like week over week, I just hear the same teams moving in the same direction. And so hopefully, to Devin's point, it does mean that the industry is carefully evaluating what's working, what's not, and pivoting. And doesn't mean it's perfect today. It doesn't mean it'll be perfect tomorrow. But I don't know. Nico, did you have that experience as well?
Kind of. It feels like the Web3 gaming industry is still smaller than we think or want, where, all of them like kind of talk to each other. And so I agree. I feel like the narrative shifts go really fast and kind of together. That being said, I still get pitch decks with play and earn. And, if you come to me with a pitch deck with play and earn, I'm going to be very critical. And yeah, and I'm also seeing still like move to earn and stuff around that. But those teams are usually not very strong, so it feels like there might be like I don't know, a separate team and not really into the echo chamber that we're all in. But yeah, I agree. I think everyone's paying attention, right? Because I think everyone is looking for some validation in whatever's happening. Because like building a game is hard, building a blockchain game is even harder. And so whatever knowledge you can take from others, I feel like people are realizing that the more you know what not to do, the better. And so I agree. It's very interesting, and it feels like everyone's in one WhatsApp group or so, like probably a Telegram group, just saying like, oh, we pitched this and it didn't resonate well. Like maybe we should try this or something. Yeah, so I agree.
Yep.
It reminds me of mobile games a lot, the way the mobile games will go in these big waves where like something's successful and then like everyone else will kind of copy it, whether they were copying it because like they understood why it was successful or they're just copying, to try and glom onto some of that success. But I think that's helped the mobile industry move forward. Like as they do, like for example, battle passes are a great example of that, right? Where like everyone suddenly realized like the value of doing that, and so they started getting integrated into like every game. And I don't think they're a bad thing. I think in general, when implemented well, like it's a good mechanic. And so you see that like mobile went through that whole thing where like they were trying to figure out what to do. We had this whole race to the bottom first that happened where everything crashed to 99 cents, and that turned out to be not very sustainable because you couldn't live off of everyone just paying $1 and then playing your game forever. And then people like EA tried to do like the premium $10 game model, and that didn't work out as great as they were hoping. And so it wasn't until like microtransactions were solidly understood and how to like do that sort of thing. And it reminds me of that idea of like the play to earn and the play and earn, and like these paradigm shifts where everyone's just kind of feeling it out and trying out and seeing what sticks and what doesn't and how long it sticks for. And I think it's good to see that some people just don't care, and they're like, as you said, doing creative things. They're trying to just do their own, like, we don't care. We're going to build what we think is interesting about Web3. Like, we're not just following, whoever's like circulating the pitch decks in that WhatsApp group, right? But I do still see like laggards. I'll still get consulting projects where like people are still using really old paradigms that are still kinds of Ponzi-ish unintentionally, not realizing they're like that just because they didn't get the memo. They weren't in that WhatsApp group, right? And so you have that sort of lag behind where they were planning it for a while. And I keep getting these ones where it's like towards the end of their project, and I'm like, I'm gonna have to pivot you really fast here before this just crashes. It's like trying to knock the car off the road before it hits a wall. Like it's tough, and I think we don't have anything really solidly figured out yet. We figured out what doesn't work to some extent, but we haven't figured out everything that doesn't work. So it's going to be, I think, a little bit of a bumpy road for a while. But I do hope that there's a lot of smart people out there, like with enough faith in the industry to contribute their best efforts to helping us get there. Is what I could, and that's what we're here for, right? Is to try and contribute towards that as well.
Mm-hmm. As a last topic, because we initially said we're going to talk about Soba, which is a no-code mobile game development platform, UGC platform. So they raised 13.5 million. Was that it?
Yep.
Yeah. It's also a Web3 platform, interestingly. So
yeah,
maybe like, okay, that's the news. We're not going to go deeper into that because I wanted to touch upon something Devin mentioned, and that is, it feels like free to play is kind of solved. There's a playbook, and as a free to play company, you can start a company, and then you can get the playbook and say, okay, we have like these few number of directions we want to go, and we can slightly adjust there, and there. Do you guys think this will also be the case for like what we're talking about? This new like blockchain enabled Web3 gaming business model. Do we think there's going to be a playbook in, let's say, 10 years? Or does this necessitate more creativity or larger network effects where, certain companies will just have make way more money because the more people are coming in, the more the better games get, or the more fun, or just the better things generally go?
I mean, it took less than a decade, I think, for mobile. And things only move faster. Assuming the world doesn't end up in World War III shambles, I think it's pretty realistic to assume that in less than a decade we'll have at least one dominant model. I think mobile has also genres that sometimes skew a lot of stuff in different directions and stuff. And we kind of pin down certain genres, but the new we are in an interesting place though if you look at mobile in terms of the way we went from casual to mid-core to slowly drawing towards hardcore. Maybe we'll have that in blockchain as well, where there's we figure out the playbook for one level of casual, and then we've got to figure out the playbook for mid-core, and we go through this sort of evolutionary path. So there's multiple playbooks, but they work for a while for their given thing. That's probably where I think realistically, in 10 years we'll end up in a similar place, or maybe sooner if enough people if the crypto winter doesn't last too long, right?
Yeah, I mean, I think to start, one of the most logical paths forward is basically applying blockchain and NFTs to the existing free-to-play model and how free-to-play games are monetized today with in-game asset purchases and cosmetics and the like. And that's probably going to be the simplest form that is a viable starting point for a lot of, more widely adopted games. And then I think hopefully over time, we do find more creative playbooks that are formed. And I think that there's an opportunity for really smart game studios to come up with their own creative monetization and create their own playbook that ends up getting widely adopted. But yeah, I think that there's so many different ways to approach this, but I think we'll potentially really quickly see blockchain almost follow the traditional free-to-play model, but give users more autonomy and more flexibility with their assets. And then from that'll be the baseline that people go their own directions, and then over time people will continue to consolidate around a variety of different models that seem to be working.
Interesting. I actually don't think it will go that way, Phil. But I feel like we can discuss about this for a whole episode.
Yeah.
To me, it feels like, and I might be totally wrong here, but it feels like if you're making a traditional Web2 game and you're giving players ownership or the ability to earn, right? You're adding Web3 on top, or what is seen as the goal of Web3, which is, you can make money of this, or you can sell after you exit the game. It feels like it's going to be very hard to make good games given that, because I think it invites value extraction from your game. And that's always going to be abused. It looks like to me, and so I just don't see it turning out that way. But I feel like this is an interesting discussion we can have at some point.
No, 100%, 100%.
And it's also part of the taxonomy that we want to do with FogDAO, which is okay, what kind of blockchain games do we have today? So that's something we're working on. So if you listener are interested in stuff like that, and maybe think about it with a bunch of gigabrains that we have in the Discord, feel free to join and work with us on that. Work with Devin, Phil, and me, and the others. I think that's it for this episode. It's been long enough. So if this stuff interests you, feel free to join us. And if you like this specific episode, if you thought that Devin and Phil gave some great insights, if you think my tan needs more work, let us know. If you're on YouTube, you can type it in the comments. Otherwise, you can always join us and just tell us how interesting our discussion was in our Discord. I think with that's everything. Still exciting stuff.
I do have a game of the week this time.
Game of the week.
I didn't forget.
Yeah.
I managed to make sure I remembered for this time, but I wanted to encourage people to play a game that is actually starting to get some traction lately, but is a unique one that's been around for a while, which is 9 Chronicles. I think is a really interesting kind of space because it's not on any existing blockchain. It's its own blockchain, and everyone playing the game is also mining blocks. So it's kind of that really decentralized, like where Bitcoin was trying to go for that idea of like everyone participating in the network. So everyone playing the game is participating in the network, and it was one that was like help funded by Ubisoft and stuff like that. And it's an idle RPG sort of thing, so it's not necessarily always the most engaging game. But I do think it's pretty interesting, and they are trying to like do more creative stuff with their economic model, and you still can like get currency through like token swaps that can go to it. And I think it's worth checking out. It's free. You don't have to buy any NFTs or anything. So it's just called Nine, spelled out NINE Chronicles. I recommend giving it a check out just because it's its own unique thing.
I like these types of games where it's more than just you own it, right? If there's any external utility being created by the players, I think that's a way to make play to earn or whatever new name for that sustainable. So that's interesting. I'm going to check that out for sure. I actually tried Splinterlands until the point that they asked me to pay $10 for what is it, like a pass or whatever.
It's basically your starter pack, and you can earn from that and all that stuff. Like that's the bare minimum you need to play the game, and that's a pretty low entry point compared to like Axie and everything else. And I think it helps dissuade bots and stuff like that. So okay. I personally think that's worth it, but I can understand if you had some hesitation there.
Okay, so Devin just told me I'm cheap, and I should be willing to invest more to learn more.
It's a bear market, Nico. Can't blame you.
That's true. Hey, I'm consolidating my ETH.
Hey, I just pointed out earlier you can get booster packs now basically half off if you just buy some DEC, man.
Oh, yeah, but the on-ramp is so bad, man. I don't want to mess around with
PayPal?
Customer support.
The PayPal on-ramp for the $10.
Yeah, let's see. Maybe I have to try 9 Chronicles now. Maybe I'll get back to Splinterlands. We'll see. All right, guys. Thanks so much, Devin, Phil. This was great. Listener, thank you for listening. This was it, and let's speak again next week. Cheers.